presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
This is awesome. Come and parlez-vous. We're going over to Paris. What's happening?
Hey, Tom, it's Adam from Paris. How are you, sir?
I'm doing great. Adam, yourself?
That's good. Long time no talk. I appreciate everything you've done for me and my family over the years. So,
well, we appreciate you growling problem with us.
Yeah, sir. I've done gold reports and all the softwares and all your books and read it. Generational thank you.
You are. Thank you so much. Appreciate it.
Yes, sir.
Now, Tom O'Brien.
Shub filling in for Tom O'Brien. This, of course, is the Tom O'Brien Show. I hope you all are having a great day. First things first, we're getting ready and bracing for Hurricane Milton that's coming in. We are going to be closed tomorrow and Thursday as well. I spoke with Tom earlier, and that is the plan we're sticking with as of right now. Of course, if you're in the cone, you can go ahead and check that online. At least for Pinellas and Hillsborough County, they have evac orders for zones A, B, and C as it is now, and then mandatory for mobile homes. If you are in one of those and listen, I've lived in Florida for 28 years, my entire life. I get the concept of Floridians not wanting to leave. We always kind of get this, it's going to hit us and it turns at the last minute, and that's fine. And there is the potential for this to happen here. But I think what we saw with Helene or Helen, the last hurricane we have, it's just not worth taking that risk. So there are some pretty strict evac orders for those areas. The governor spoke as well earlier. You can check that out on YouTube, and they provided some resources online and physically as well for people who are affected and going to be affected. Let's take a look at what we have going on right now. The composite up about 1.29%. Dow Jones Industrial up about 0.26%. That dollar still pretty strong on its counter trend bounce. Trading up about 0.16%, trading at 102.56. Crude's coming down a little bit back to earth. Okay, you have at least the Brent off about 4.28%, and then you have the Ford contract off about 4.25%. That comes essentially after some news that Israel was going to limit any kind of retaliation or strikes against Iran, essentially to military targets, not nuclear and I guess assumedly not any kind of gas infrastructure or municipal infrastructure. Looking at the ES right now, trading up about 0.87%, 5,794. You look at the SPY today, we're up about 0.83%, trading at 572. But we do have some light volume to the upside there, and we'll see kind of what we can muster out through the rest of the week. Again, we'll be off tomorrow and Thursday. Let's take a look if anything else is jumping out at me right now as we're just kind of running over. Not seeing too much. Steel Dynamics off about 2.2% right now, and Tesla up about 1.7%. My charts are acting funny here, huh? Yeah, so again, coming off that 130 area, we'll see if we can bounce off the 127, maybe the 125, and get a nice trading range. Let's take a look at SMCI. This is a supermicro computer. They are dipping off today after a major run up to the upside. We spoke about this yesterday, but on this news that they're delivering, 100,000 GPUs, we discussed this. It's just kind of strange because they don't make GPUs. One, this is what we're bringing up, right? So whatever they're getting them from, they have to pay for the cost of acquisition and then whatever they deliver to people. And then additionally, they are not reporting their financials. It is such a weird thing. I think, again, there's this weird way that the market's functioning where it's almost not logical in some capacity, right? We were seeing that with HIMSS too, where it sold off for not really a great reason. Right, the drug that was taken off the FDA list was not the drug that HIMSS was compounding. They rebounded a little bit, right, off of that. Supermicro goes up on this news that they're delivering 100,000 GPUs. I mean, that's great, but they don't make GPUs. That's not what they do. And so anyways, it's coming back down to earth a little bit now. And again, there's just a lot of gray area with that company regarding failure to file. We can take a look at HPE, right? So one of the big things that I speak about when I talk about Supermicro is their major moat is these liquid cooling systems, right? Liquid cooling systems, no doubt, are the future for these massive server farms. One of the things I said is that the company Hewlett-Packard is attempting to break into it, and it seems like they're doing okay with a showcasing that they had, right? So I'm about 0.53% right now, trading at 20.97. Let's talk a little bit about it. Hewlett-Packard Enterprise hosts an investor event. It's going to be Thursday. They're showcasing its artificial intelligence solutions. Bank of America expects its liquid cooling technology for AI servers in the data center will be highlighted. These guys are up 23% right as it stands now on the yearly. HPE stock was a fraction. Okay, we're at that. HPE agreed to buy Juniper, which is massive. And really the only other people they can compete with, again, in this liquid cooling scale, which no doubt is the future, is going to be SMCI. And I have doubts over the future of that company because they're getting kind of shady, right? I took a look at Hewlett-Packard's website just with the cooling solutions. I'd really recommend checking this kind of stuff out when you hear this new tech, because we are in a really cool kind of environment right now where all this new stuff is coming in, and there's the potential to make huge gains going forward. These companies can situate themselves to be integral to the economy in the future that we're building, especially with with AI, right? So basically what's appealing about it that I found pretty interesting, they're doing a hybrid system, which is very interesting as well. You get 70% goes to water, that gets taken off somewhere else, dissipates the heat, and then air as well. This is pretty cool though. The direct liquid PLC cooled data center cooling cost per server is $45.99 a server. For trad air cooling, it's $254. Obviously, they did the round number of 10,000 servers. Yearly, you spend this much, 2.5. This additionally as well, again, will have impacts going forward, especially if we start really implementing stuff at a government level of taxing people based on the amount of CO2 emission they have. So these guys, you're saving a lot, essentially, if something like that comes around. It's only, 3.9 million pounds of CO2 released into the atmosphere per year with liquid cooling versus 21.6. This is pretty interesting in and of itself. Essentially, it kind of makes sense if you're building out these large centers. So I'm taking a closer look at Hewlett-Packard right now. I still want to see some more. We're gonna wait for that event on Thursday. If anything comes out and it's like really jumping at you, as long as of course I have power or whatever, it'd be interesting to see because I think at this price point, it's kind of interesting. You're only at $27 billion right now for this whole company. So at 2096, obviously that's accessible just on an equity level. 27 billion isn't, massive or anything like that for a market cap of a company that could get in and, really contribute to this massive mobilization towards AI. Folks, stay right there. We'll be right back with Basil Chapman.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at tfnn.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at tfnn.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, everyone. This is Jacob Shoup filling in for Tom O'Brien. Now, like we do every Tuesday, I want you to take a journey with me. Don't judge me for using Bing. That's just this computer. We're going to go over to TFNN.com right there, and then we're going to shuffle on over to newsletters. And right here, okay, second row, first column is the opening call newsletter by Basil Chapman. This is a fantastic newsletter. He has a great portfolio going. He is honestly just constantly paying attention to it and really giving some good insight on a lot of stuff. Of course, we always love listening to him at 10 a.m. Eastern time. And then we're going to go over to services as well. Now, what I think is, well, actually, we don't have to go to the services, right? But I will show you right here. The Basil Chapman live trading webinar here, this is December 15th. But what I want to say going back on the newsletters is that when you become a subscriber to the opening call newsletter, you get access to a trove of these webinars that Basil only does for his newsletter subscribers. Okay, so you get access to those archives immediately, and when you're a subscriber, you get access to them when he starts doing them. And he's pretty good about having them pretty periodically. The last one was July 23rd, and it was fantastic. It was sectors and stocks to focus on at the next phase of the market cycle. We are joined by Basil Chapman right now. Basil, how are you doing?
I'm doing well, Jacob. How are you doing?
I'm doing well. We're taking everything in strides over here. So
I hope that everything works out well. And on Thursday we say, oh, what a mess, but you're all safe and everything works out well.
Absolutely. Thank you, Basil. Well, what are we looking at right now?
So we're looking at the Dow. This is the daily chart on the left. This is in the middle is the weekly chart, and on the right is the monthly chart. And there are a bunch of techniques that I like to discuss. But in the meantime, the most important one right now is that, so for subscribers to the opening call, we've been long. The latest long position that we have in the Dow is from the August 5th from the lows. And we've held that. We've had trading position, but we've got a core position there. And one of the things I look at, now this is the chart on the left. So I'll go through a couple of things that are very important. The MACD, the moving average convergence divergence, which kind of takes the shape of the chart that you follow, you can see this kind of M-shaped pattern, has gone negative. The relative strength, this gray line here, is lower than it was about 4 weeks ago. The stochastic, which was very nice in the 95, 93% area, which I love, over 80%, over 90% is really terrific. But once it starts to slide, you've got to be a little bit careful. So it's at 58%. Over 80%, as I say, is what you want to see. Over 90% is fabulous. And look, the weekly chart is still at 93%. So that's just saying intermediate term, I think that we're going higher and that there should be higher highs. And I'll talk just for a brief moment because we don't have a position here. But the QQQ trading at 489, this is the index 100, made a peak seen. And the Chapman wave methodology, peak D is really what you're looking for. And I'll do this really quickly because I do this during my show. I do this live because it shows the technique in real time. You can't make things up when it's real time. So we were waiting for a peak D for the Chapman wave buy signal to a buy mode to conclude, to go to at least 4 higher peaks. And even the 10-minute chart, we just went to this leg D here. And you can see the technicals, the MACD, stochastic, on balance volume, that 9 period over the 14, that's green. So those are the things that I look for. I'm just doing this very quickly. But in the Dow, look, the 9 period moving average in the daily chart is still strong over the 14. But what I've been saying, oops, that's the QQQ. Let me just go back. There we are. It takes a second. Is still positive. But you can start to see that the rallies are starting to they're not as strong as they were. And I've been saying for about 3 weeks that I'm talking about this as if it's a high-level consolidation. So there's a rotational correction going on. How it works out is going to be very important because key support now for the Dow, a close under 41,700 says, oops, you're probably going to a sell signal on the daily chart. Weekly chart, there's that D. We're always looking for those Ds. It's got this technique that I call the inside track repellent zone. Look how many times it went into this little mini up channel and got repelled. This is the first time it's hugged that area. This is the 3rd week. So I don't have any signal yet we do have an insurance policy with one short position, but other than that, we've got longs. I'm still looking at this as if to say, I don't have a signal to say to go short the Dow. It's holding very well. And if it closes above 42,628 in the daily chart, that's going to be really good because that will expand the 9 period moving average over the 14. It'll only go pink, meaning the 9 goes under the 14 if we start to go into the 41,600s. That's what I'm thinking. So that's the one thing. Then, as you say, I've got a portfolio. I call it a portfolio, but it's positions that we have for subscribers. I like to have triple digits, double digits, single digits, because people come from all different. They have looking at positions on what they can afford or what they're ready for. So I have in all different areas. So one of the things that we had been looking for a long time, we are long the IAI, which is the broker-dealer ETF, all the way back from 2020. So we've got that core position. But I wanted to add to that. And recently, we added in the 16s, we added to Robinhood market participation. Yep. I thought that this looked really good. So it's trading up about 50% now. It's at 25.75. In leg C, a very big move today. I'm not sure what the story is, but it's up 10% at 2.43. Yep. And it's only a leg C in the weekly chart. And to me, it's important that I'm looking at a broker that is doing well, because this means this is public participation. So all in all, I'm positive. Shorter term, I think there's a lot of whippiness that we're looking at. If we can get through this week, I think that'll be a good sign. If we don't break down at any point, I think buyers are going to be forced to come in, and maybe we have a bit of a run before the election. But I'm looking at this so far positively. But the monthly charts are suggesting higher highs are still to come.
Yeah, fantastic. And what's interesting with Robinhood, especially right now, is you had obviously Barclays rose a target. You had a bunch of other analysts raise targets. They're going to have some investor day, which in December, which a lot of people are hyped about. They believe they have a lot of new people coming in using their platform as well. So there's a lot of really positive look on Robinhood as it is now. What a great pick. So.
We had waited a long time. This hit 85 round number high back in August of 2021, and then slumped down to the $6 area back in 2022. So this is really the start of I think a much bigger move in Robinhood looking out.
Well, and I would say too, a lot of young, I use Thinkorswim, right, to trade, but so many young people like my age and certainly the generation below me, they only know how to trade with Robinhood. They don't know anything else. Yes. So certainly that's going to dominate at least the market share going forward, and more entrants, especially younger ones, are going to know that's where they have to go to do it.
Well, one of the reasons why I liked it is that I figured that these are the players that are in gold, and these are the players that are in Bitcoin. So even though I've had since March, I've been saying I think Bitcoin's making lower lows and lower highs. I think it's getting ready for a nice bounce in about another 2-3 weeks. I think it'll have a good rally. So maybe that'll also help Robinhood.
Yeah, and so I would love to hear more on that analysis at some point too, Basil, with Bitcoin. But thank you so much for coming on. It's fantastic having you on every Tuesday.
Thank you very much, Jacob. And good luck for tomorrow for all of you.
Thank you, Basil. Take care. Folks, stay right there. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everyone. We were just joined by Basil Chapman. He is the author of The Opening Call and also has a show on 10 a.m. Eastern Time on TFNN. Really, I recommend if you didn't check out or you didn't catch whatever segment we just had, that after programming today, you go to our YouTube channel That is Tiger Financial News Network. We're going to have that excerpt up there for you guys. You can go back, read what Basil was saying, read his charts rather, listen to what he was saying, and kind of really digest that. And if you want to check out the newsletter, you can do so risk-free with a 30-day money-back guarantee for all first-time subscribers. That is on all newsletters. This one in particular, the opening call newsletter. Check it out. We also have all of his fantastic webinars that he's done. He was talking about Hood a little bit. This is Robinhood. And one of the things that really blows my mind about Basil and some of his picks is he just sees this stuff like so far out. It really is. I mean, when I first started working here, he was one of the only guys talking about uranium. You know, he caught on to the semiconductors real quick, using them as a barometer for the rest of the economy or the rest of the market. I mean, I think that's brilliant, right? And I guess Hood's no different for him at this point. We're up about 9.97% today. You had numerous trading houses raise the price target. Barclays in particular has risen it essentially, it's raised it to 23 from 20. It's a long day. Trading at 25, that's a little bit above that target. But they have earnings coming out on 10/30. The end of this month here. And then they're going to be having a investor day in December. I think one of the big attractants to this stock in particular is, again, what I was saying at the end there, which is most young people got their start on Robinhood and they don't really have a reason to change. This was a very new kind of smaller company. It was attracting smaller investors in that kind of in that demographic, I would say. But these kind of companies also mature with their key demographics as well. So Robinhood's interesting. I don't have a position in it in any capacity. It's not usually what I look at, but it is pretty interesting. I'll definitely be waiting for earnings and then see what they have to say on December. Barclays raised it again 23 to 20. They said that they see momentum in the business likely to continue given the appealing offers and product sets. They said the transaction revenues should grow from the second quarter and could come in 5% ahead of Wall Street estimates. If that's the case, you're going to get a nice little rally from Hood. Now, usually we have Tim Ord on today. Unfortunately, he's not going to be here, and then we are also off on Thursday, so he'll be coming back on Tuesday. But I know he's going to have some really good stuff for us. In the meantime, I want to take a look quickly at Palantir. No major news on them today. This is probably just some internal stuff. We're trading at now a massive high of 41.33. And this, to me, at this level, gets a little Icarian, I guess, to where you're really making some major pushes to that upside on low volume. I certainly believe in this company in a major way. I have a lot of shares of it. But I do think at this level, I could absolutely see some kind of retracing. Maybe to this high volume, maybe to the, I couldn't say the gap up. The gap up would be pretty massive. You'd have to have some pretty bad news for them. But 41.44 on some low volume like this, I could see some minor pullback in Palantir. But if you're, a long-term holder, which I am in this company, we're sitting pretty right now, which is fantastic. They continue to get new deals. We were talking a little bit about how they were expanding into the enterprise space away from military. Of course, they have government contracts still, and they will continue to. But again, that program they had to try to get these developers and these kind of systems engineers that work in enterprise environments to try their stuff instead of, going to the salespeople or CEOs or whatever has proven to be, at least right now, pretty positive for them. And I think that we're just in the nascent stages of seeing how much they could dominate the non-government environment, which is pretty nice for them. Let's take a look at PepsiCo real quick. They cut 2024 guidance. North American sales are lagging expectations. They are up 1.69% today. They said on Tuesday revised its 2024 sales outlook after its North American international sales lagged expectations in the third quarter. They told investors on Tuesday that it now expects the end of the year with low single-digit increase in organic revenue below the previously expected 4% growth. You did have JP Morgan, which doesn't necessarily matter what these analysts always say, right? But this one in particular said they expect the stock to remain negative to neutral. The company posted adjusted third quarter earnings of $2.31, slightly above the $2.30 expected. Revenue in the quarter trailed behind estimates, coming in at $23.3 billion versus $23.8 billion. PepsiCo also reiterated expectations of at least an 8% jump in core constant currency earnings per share. Let's see if there's anything else of any. I wonder how this kind of affects Celsius too, right? I mean, they buy from Celsius and distribute it. So, I mean, I don't know. They obviously don't own, right? But I wonder if Pepsi keeps saying, like, hey, listen, we got to focus on some other stuff right now, and you get some contraction from purchases, essentially. We'll see. At least Celsius itself is trading off about 0.56%. Let's take a look quickly at Neo, right? And really, China in general. Okay, you're getting a sell-off today, especially in the Hang Seng, obviously. You had this major promise of a pump-in, and they are getting money and stuff like that, right? But then you had a very long holiday where people aren't trading. And so you take a look at the Hang Seng, I mean, over a 5-year period, it's off 20.46%. Even at the beginning of this year, you're starting off like, okay, I don't know, let's see in January, right? At a pretty big low, comparatively speaking, right? So around like 14,961 January 22nd. And you get all these guys who've been buying in at some point, and you've been moving somewhat to the downside a little bit. From January, you do have some upward movement. You have some upward movement in May 20th, which has been the high for the year prior to right now, about 19,636. And then really a slow burn down since then. And you get all these investors who, maybe somewhat red, depending on when they got in, and they can't trade yet. And they see all of this stuff go up and up and up, and they can't trade. And you're finally letting that floodgate loose, and you're seeing that sell off a little bit, which I think is what this is. Neo's off 7.81%. I get weird with some of the Chinese car companies in general. Not that they make bad products or anything like that, but of course we have tariffs coming in, and then also I always get kind of concerned with economies and how they interact with their home kind of political situation, if that makes sense. Neo still seems to be okay though. We can talk a little bit about the fundamentals at least when we come back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of Tfnn.com. Tfnn, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everyone. This is Jacob Shoup filling in for Tom O'Brien. This, of course, is the Tom O'Brien Show. Take a look at Neo. Before we went to the break, off about 8.17% right now. Again, I think this is a little bit of just like furor that was coming in with some cash infusion from the CPC there. We can take a little bit of a look into the financials, though. Neo might be okay for some time being from here. Again, we might be experiencing right now a little bit of an oversell in it. You take a look right now, Neo reported 144% year over year and a 91% sequential jump in deliveries in the second quarter. Its revenue doubled year over year to $2.4 billion. Its gross margin improved to 9.7% from 1%. Vehicle margin surged 12.2%. That's huge versus a 6.2% in Q2 of 23. Those beat estimates. Neo announced, this was last month, they announced that three investors had agreed to invest 3.3 billion yuan, that's $470 million, into Neo China, and it will pump about 10 billion yuan or renminbi into Neo China itself. They're ramping up a really big mass market vehicle under a sub-brand, which is Onvo, and it seems to be doing all right as well. So, at least in the, I say short term, but not within the year short term, Neo seems to be pretty solid, right? Obviously when you get this pump in, at least from business, right, is positive, but pumps from governments, especially over there, the Chinese don't like to constantly just let money flow a bunch. So any kind of, I think, buying spree based on any kind of cash injection, like a one single time cash injection to spur economic activity, may not be the best reason to get into stuff, but I do think fundamentally Neo has some interesting stuff going for it as well. Let's take a look here. Something I found kind of interesting. Actually, first, let's talk about CCJ. This is Cameco. I'm loving these uranium stocks. See where we're at today right now in CCJ, up 15%. It is held pretty well up there at that 51.49. They're eyeing expansions for uranium mines, which is pretty solid. They said they're considering expanding some of its mining projects as global demand for nuclear power is rising. This is a quote, said we've got some fantastic uranium ore bodies, and we're looking to extend and expand those when we can. Obviously, uranium ore prices have been doing pretty okay as well. And I think this is a positive thing for us uranium bros out there, even in the event, and I've been seeing this some, and one of our viewers sent me a fantastic article as well on kind of, discussion on how much nuclear power will be used in the future, right? And this conversation around other renewables. I mean, uranium is not a renewable, but you have the discussion with renewables, such as solar, wind, all that kind of stuff taking place. No doubt those will become relatively dominant because we're just sinking so much money into it and building infrastructure around there. But I do think as well that even if uranium is not the number one way we generate power in the future, that it is without a doubt going to be utilized way, way more than it is currently. So companies like Cameco, which one of the largest producers behind the nation of Kazakhstan, is situated to be in a pretty solid position. So take a look at that, do your due diligence. Again, we were looking at Kamiko at some really solid prices around here, like 35.43. Tom had it in Market Insights as well. Again, you can go check out, if you go to the newsletters tab, you can hop over to Market Insights and we update this portfolio as well. He sold that for a 15.41% profit. Pretty solid. Over the year, actually, Market Insights has been doing insanely well, up at 97.45% gain. So get in there and check that out. Again, 30-day money-back guarantee if you don't have it yet. All right, let's take a look as well at this. I thought was awesome. And I feel this more holistic approach we're taking, I think in society, is maybe the way, the new wave, essentially. This is Home Depot is ordering corporate staff to take 8-hour retail shifts, which I think is phenomenal. Employees, including senior management and remote workers, will have to complete an 8-hour shift beginning in the fourth quarter of this year. This is what the CEO said. We need to stay connected to the core of our business so we can truly understand the challenges and opportunities our store associates face every day. This, in my opinion, is like bullish on the long term for Home Depot, because he's totally right. You know, you can run into this thing where, you know, your office workers or whatever aren't really understanding what's going on the ground. This happens in any hierarchy, right? Where the people at the top are busy doing their stuff, and that makes sense, right? And that needs to be done. And then sometimes they can get away where they don't understand what's going on the ground, right? Happens in the military all the time, I've heard from friends. I mean, this is some big stuff, especially in massive, massive companies, right? And so this is really kind of cool coming from Home Depot. But I just wanted to bring that up because I thought that was kind of interesting. And I was happy to see something along those lines. Let's talk about the big thing today as well, which is Hindenburg's attempt to short Roblox in a major way. Off about 3.09%. You have a market cap about $24 billion in this company. Roblox, I've said consistently, is what the metaverse is attempting to be. All these young kids are on it, constantly playing it. They constantly play. They spend a bunch of money on it. There's all these memes online, of course. It's literally inculcated into the cultural conversation. How about that for alliteration? Where the kids are asking parents for money all the time to buy stuff on Roblox. Hindenburg comes out and essentially trying to short them. I don't... Well, we can talk about it a little bit. The title for this is pretty insane, right? Inflated key metrics for Wall Street, they're saying. And then they're essentially, I'm not going to say the title of this research paper just because it's kind of, I don't know, a little bit insane. But essentially that kids can be at risk of, I guess, predation or whatever being online, which is kind of a, it's a pretty insane claim. It, of course, does occur, no doubt. But you can see where Hindenburg kind of approaches these things. You see what I'm saying? So anyways, let's take a look here. Roblox, they say, is a $27 billion online gaming platform. Company has reported net losses every quarter since becoming a public company. With the last 12 months totaling $1.07 billion. Its stock trades at 8.6 times sales, a 57% premium to gaming peers. Insiders have cashed out $1.7 billion in stock since the company's 2021 direct listing. In the last 12 months, insiders had sold $150 million in stock. It's not profitable. Its stock price is too high, they're saying. And then they're saying kids are at risk, essentially. I would recommend checking this kind of out. But they did take a short position. This over the past few days, of the past few months, I would say. This is starting in September. It's honestly not a great sign, but this high volume to the downside is pretty intense. I do think Roblox is still hyper dominant in the cultural context. It just really is. The financials obviously are speaking for themselves in this capacity, which is very true. However, I think companies like this are here to stay, and if anything, it just requires some kind of change at a higher level, right? The platform, the process itself makes sense and it works. It doesn't mean it's being managed in the best way. Folks, stay right there. We'll be right back.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at Tfnn.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit Tfnn.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everyone. Jacob Shoup filling in for Tom O'Brien. We're taking a look at Hindenburg's paper on Roblox. One of the things I thought that was kind of interesting is they're saying that the company was artificially inflating daily users by incentivizing content creators to create kind of like AFK or like away from keyboard kind of games. They're saying the average login time was only about 22 minutes. I don't necessarily agree with that last one. Not that that necessarily matters in any capacity. You have games like World of Warcraft, for instance, where people will just log in for sometimes even like 2 hours out of the entire week, right? And they're still generating a bunch of revenue from these people. The other thing I'll say is that at least in 2023, they paid out about $740 million to creators, right? Generating a revenue of $2.7 billion. That's a real economy going on in the game. I'm not saying that the price point that is at right now is sustainable or accurate, but people continue to play it, and at least everyone I know who has, kids roughly like, I don't even know, 16 to 8 or something like that, even less, they play these games. So anyways, do your due diligence if you're thinking of getting in on something like that, and also keep in mind too, that you're buying on this kind of news, or at least selling on this kind of news, which means you might be kind of out of the running already. Let's take a look real quick at Boeing before we end it. They've been having some issues again. They have their machinist strike ongoing, off about 0.53% today. They delivered only 33 jets in September. Let's take a look at this a little bit more closely. They delivered 33 airplanes in September. There's actually 6 more during the same period a year earlier. Through September, Boeing handed over 291 aircrafts, well below the 371 it had delivered in the first 9 months of 2023. Rival Airbus delivered 447. They still got problems. Folks, thank you so much for joining me. Take care. We're going to be gone tomorrow and Thursday. We'll keep you posted if anything changes. That extends out to Friday. We'll just see. But if you're in the area, stay safe. Thank you so much for joining us today, and we'll see you when we get back.